Hey everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets. It is 5:29 p.m. Eastern Standard Time on February 15th, 2012. And the markets had a down day today, not down big, but some technical stuff going on that I think we should take a look at. And before we do that, I just need to remind you that this is not to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions. And I got to tell you, too, everybody knows there's no such thing as a sure thing. And even what looks to be perfectly sound technical analysis at times doesn't work. You have to realize that, and to a small degree, I see a little bit of that going on where we are right now, and I'll tell you what I mean in just a second. But you trade at your own risk. I'm just a guy who draws lines on charts. I'm not a financial professional. So look, let's take a look here at an hourly chart just to remind you where we've come from. We've got this inverse head and shoulders pattern. We're clipping off a little bit of the left shoulder over here, but here's the head, here's the right shoulder, and our target, as I've gone on many times over the past weeks, our target is roughly 1380, give or take a little bit. And that is the minimum target. Okay, if it reaches 1380, that doesn't mean we all stand back in awe as the markets do a U-turn and head back down to new lows. It doesn't mean that at all. It just means that is the target area that we would expect this pattern to produce as a minimum. So, what's going on here? Well, we've had this kind of strangely shaped something of a channel that has kind of been a little sloppy since the latter part of December, and today added more to the sloppiness. You can see, if we now look at a 15-minute chart, you can see this red line that seemed to signal, I thought that would signal something of some real technical significance. And when we got below that line yesterday, I was thinking, even though I didn't do a video because of a really poor internet connection where I was, one would think, well, now we're just going to head down and test those low 1330s. But instead, the market started off with a rally today, and then hit a level here in the morning. Oh, excuse me, that rally was late yesterday, late on the 14th. The rally continued and got over this line. I thought that should signal a move to the 1360s, but that and I think I mentioned a level online of about 1354, 1355, but it did that momentarily. It could not hold that level, and we came back down. And what kind of it looks like to me at this point is that the market is likely going to go sideways for a bit. So I have now drawn these lines showing that this may be kind of a triangle pattern in development. Now, if the triangle breaks to the downside, we would expect this line to put up a fight. And this line, just to remind you, is drawn from the 2007 fall S&P market top and the 2011 top. We are over this line now, and that should be support. So going back to that 15-minute chart, here's that line. And What I kind of think may be going on here is that this could either be, and I hate to be wishy-washy, but when you're dealing with the triangle pattern, you don't know until it happens. It looks like we're either going to go sideways for a bit and then break down for a back test of either this or this level, okay? And that would make some sense. Especially if that break of that bottom line could be put off for 4 or 5 days. In other words, if we could just kind of kick around in this pattern just a little bit longer, then what we would see is that the measured move out of this pattern is the height of the pattern from the first reactive move. And the first reactive move means the first move that is contrary to what started the pattern. There it is. And you can see that if that were to happen in 5 days or so, that we could break to the downside out of this pattern and back test those that level right around 1330, or by then a little bit lower possibly. If the move were to break down tomorrow, then I'm thinking that this should catch it, okay? And I'm not giving up on that eventual target of roughly 1380. And one of the reasons I'm not giving up on it is they just historically have a very high percentage of success in these inverse head and shoulders patterns. Even though this one is a consolidation, it's not a bottom and it's not a top, it would be just a consolidation. So that's what I'm looking at right now. You can see the market has clearly a loss of a sense of direction, and that's typical of when you get in one of these triangles. And now, I want to show you something real quickly. I think I've got to go to a 2-day chart to show you this. No, maybe a 1-day will do it. I want to show you, excuse me, just a second. Okay, back with you. Sorry about that. Had to clear my throat. Didn't do much good, but tried it. I want to show you that we had an inverse head and shoulders back here in 2010 that broke out in September. It went up for a while, got almost to its target, and then sold down heavily in what ended up being a consolidation move. And when we were here, this kind of was looking a little bit triangle-ish, just this little pattern in here in general. And then once it came back and didn't quite back test this line, you can see this happened at about the halfway point. Okay? Now, if we look at what's going on, oh, by the way, you know the adage, they say the flag flies at half-mast. That happens to be true very often. Even if we look at this head and shoulders pattern, when we came off the bottom, it formed a corrective move at about the halfway point on getting back to the neckline, came down, had a corrective move that was the halfway point of going back down for that right shoulder. Then when this broke out, it came up here, had a corrective move, and then had another move that was about equal to the move that preceded it. So you can see how often you get these little corrective moves along a larger intermediate advance or decline. So it is very possible that as we see what's going on here, we could come back at some point and say, you know, this was a corrective move, and maybe this is a secondary corrective move. If this is a corrective move, then that would come off the break of the neckline, and that happened where? Almost exactly halfway to our target. So, you know, that's a little far afield right now, but I've seen it happen time and time again, and I'm willing to consider that. So anyway, that's That's what it looks like right now. Hold on just a second. My phone's ringing. I'll be right back with you. Oh, sorry about that. I'm doing business. I'm in North Hollywood, California right now, and had to take that phone call. But basically, what we're looking at is an area of what appears to be consolidation between these two lines. That consolidation, by the way, does not necessarily mean it's a continuation pattern. This could reverse, come back, and test this 2007-2011 resistance line that now is broken. And like I said, if that line were to be tested in about 5 days, then that would also allow this small pattern, if it does break down to the downside, to fulfill its... Okay, got interrupted again by the housekeeping staff here at the hotel. Anyway, as I was saying, if that were to happen in about 5 days, then this small pattern could both fulfill its implication if the move is to the downside, and this line could still fulfill its implication as support. So, as it stands right now, this line should be support. This line is the target, and we are currently about 25% in that range from support to the target. So that tells me that over the next 2 or 3 weeks, the bias should be to the upside. And so that's it for today. Look, thanks again for putting up with these things on the road. You know, when I'm in my office, I can sit there, have privacy, and, you know, shut off the phone if I have to, but whatever. You understand. So look, thanks for watching. Take care. There will be a weekend video update. It will be posted on Sunday, and we'll go over some of these things, and maybe we'll have something really interesting to show you. One more day of trading left this week. No, excuse me, 2 more days of trading left this week. A video tomorrow. I will do the best I can. I will be in Vancouver, British Columbia, and I don't know what kind of connection I'm going to have. So look, take care. Thanks again for watching.